In this video, guys, we're going to look at two simple but effective strategies for swing trading the E-mini S&P 500. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, so S&P 500, super popular contract, super good mover as well. It's one of the more popular ones for a reason. It's got good intraday volatility, got good swings as well. It's a nice market to trade. Now, so I've got two simple strategies. I'm going to keep this video brief, an overview. If you're interested in digging deeper into these strategies, then the first thing to do is to work out your risk management strategy, where you're going to put your stop, where you're going to put your entry, where you're going to put your target. And the other thing is how you're going to alert yourself to these strategies. Are you going to scan every day? Are you going to set alerts that alert you on your phone or whatever? That's the things to look at, and then you can go deeper and deeper and deeper into it from there. But overview for now, two simple strategies for trading the E-mini S&P 500. Obviously this works well on other markets as well. Trading on your Forex pairs, trading on your other commodities, trading on your other indices. Okay, so let's look at the first one. First one is daily breakouts with volume. So on a daily chart on this, as we are with all of this, because we're swing trading, I'll look at some intricacies in a moment, perhaps on an intraday here to give you an idea of how this one works. But for now, we're in a daily chart. Okay, so this one here is a bull flag. Obviously flip all these on their head for the other way around for the bearish side. So a bull flag. Nice patterns to have on all charts. You've got a good drive up, you've got hesitation, and if you get a breakout of the flag with volume, then that's the cue to get involved and follow that for potentially a new trend, multiple days, multiple weeks, or longer if your thesis dictates this. Now what you're looking for, obviously the key thing here is volume, guys. We're looking for that volume move there that drives up. How to get into these, either waiting for the close of that first day and getting, or you can put in an automatic limit, and that would be a stop buy that would get you into the market if we broke that high. Now obviously you've got there's risk management and all stuff to go into this as well, which we want to go into in this video, but that's a good way of getting into the market and as a nice swing trading entry. The theory being that it's been sitting there consolidating after a drive up and it's just been waiting for the next leg. If you've got a catalyst on that, even better, you know, some kind of news, etc. The other one is this, so very similar but slightly different in that this is a range. So the market's been sitting in a range for a while. It's like kind of pent up, all the buyers and sellers are guessing where to go. All of a sudden we break out with high volume, relatively high volume compared to what the days have been like before. And again, same kind of thing. You're either buying on the close for a follow through, and obviously swing trading, you know you're going to be prepared for a little bit of a pullback on that potentially, so that might be a bit late for you. But if you've got a longer term view of kind of a few months, then you're not bothered about sitting through 2 or 3 days of down move if it's going to move on and start a new big trend. So there's that. Or you buy, just as you were doing with that, by using a stop buy order that automatically gets you into the market a few kind of ticks or points above that prior high on the range. Okay, so that's a daily breakout on your daily chart with volume. Important to have volume with that. The second one, guys, is extended trend pullback. So if the market is already trending, if the S&P 500 is already trending one direction or another, slightly different tweaks if you're in a downtrend because it's a little bit more aggressive, you don't get as much time. But for uptrends, if you're pulling up green candles, little tiny reds, greens. If you get a couple of reds, and then in this one specifically, you get maybe a kind of candle that has a bit of a wick, like a hammer type candle or some kind of reversal candle here, then that's generally a cue to get involved. Let's make that stand out a little bit more here. That's generally the cue to potentially get involved for a resumption of the trend. So if you're kind of see the extended move and you see kind of a couple of days down move, maybe on day three is not a bad timing on this. I'm going to put 3, so maybe there'll be one more candle here potentially. Day 3, you get that drive lower. If you see that kind of candle at the end of the day, you're buying on the end of this, the close, and then maybe you can use a stop under that. Again, stops are up to you. Not a bad little pointer because it's the uptrend, and you get the intraday change in trend to potentially give you a good entry for a further move to the upside. Okay, so this one as well is a nice one. You're using a moving average here. Now I find a 20 period is not bad. Some people use 10. I mean, you can if you really want to use a 5, but then it's got to be a really strong trend. You've got to be kind of nimble with it. But let's just stick with a 20 for now. Play around on your chart and have a look for yourself and see which one you like. So 20 EMA, 28 SMA, something like that. As the market starts to pull back, it's not quite as urgent as this, not quite as obvious in this. You could use in conjunction with this, but let's keep it separate for now. You get 2 tests of the moving average. So in other words, after your 2 or 3 day pullback, remember we're looking 2 or 3 day cycles, as the market starts to pull back and it starts to test that moving average, you're not buying on the first test because maybe it's closed near the lows, maybe it's not done quite as nice reversal candle as that. So that's much better from an intraday perspective, looking like they've changed the sentiment intraday. We're back on the bull market. Here, hasn't quite done it yet. The next day, maybe you get this kind of move, which is, that's day, you imagine this is day 1, that's day 2 of these 2 candles here. You get a low put in, the next day maybe you test the low or break under the low, but anyway, it holds, you find some sort of support over a multi-day period, could be 2 days, could be 3 days. That moving average is still kind of sloping up, forcing price. When you see that, that's not a bad place to kind of look for buy entries for a further move potentially that's going to carry on the trend. Not quite as urgent as this, different kind of thing for that, but another way of kind of guiding you on trying to place your entry in the best possible way rather than chasing it and stuff like that. So those are strategies for swing trading, the E-mini guys. Flip on its head for down moves. Just one thing to say for down moves is that very often you're not going to get more of an extended move. They're much sharper. The bear market rallies are much sharper, much more aggressive, and they look like they're the bottom, and then it kind of rolls again. So it's a little bit different, but you look at your charts and have a look and see historic bear markets, historic down moves, and how it compares, and you can align yourself with that. So anyway, guys, this is kind of a seed of some strategies to maybe think about for swing trading the E-mini S&P 500, and I'll see you in the next video. If you aren't subscribed to the channel, hit the button below, and more videos from me and others. We'll talk about trading strategies, talk about mindset. If you're into your markets, you're into trading, this is the place to be, or one of the places. Loads of cool videos on YouTube as well. All right, okay guys, take care, bye bye.